today on the 14th. So basically, just having a look at Nifty charts, and what we can see is that here on this day we had marked out what is known as an exhaustion gap. So exhaustion gap basically is a potential reversal sign, and what it indicates is that there could be a fatigue in the up move. This exhaustion gap is now closely being formed by a bearish counter attack candle on the Nifty. So after the exhaustion gap, we had a open up and a new high in the day. Today, a continuation move, once again a gap up, but this gap up has been sold into, and we are now looking at a bearish counter attack kind of a structure on Nifty. Simultaneously, we are seeing this. Uh, we are seeing the we are seeing a gap up doji formation on Bank Nifty, and this is also after a near 4,000 point up move. When we have a gap up of this sort after a consolidation of several days, it is always question whether it is a breakaway gap or if it is an exhaustion gap. Uh, the fact that the gap happens so late into the up move is generally a signal of an exhaustion gap. If this is not an exhaustion gap but a breakaway gap, then it is official that we are only halfway through the up move, which means that if we can see that the Bank Nifty made a move from 29,000 all the way to 32,000 in a matter of say 20 trading sessions. Uh, so if this is indeed a breakaway gap, then it will be followed up with a continuation and a pattern target of 35,000 Bank Nifty then gets set. But after a 3,000 point up move, which is roughly around, you could say, 10 to 15%, somewhere in that lot, like 12% move, it is possible that this too is an exhaustion gap. Alongside, when we see the mid cap index, so the mid cap index in the same period has already formed a bearish counter, and now it looks like it might form. It is engulfing this doji. It may engulf, or this is another dark cloud cover, a kind of a candlestick formation. So it is reasonably safe to say that that the markets are showing signs of fatigue. This does not mean that the markets are going to fully reverse, but there are signs of fatigue, and it becomes possible for us to attempt writing an option. So I'll just go to the position here. We can see my positions. So it's net long, and we have just added Shri Cement's short, which is not doing too well at the moment, but it's okay. And now, with a few minutes to spare, I'll just maybe place an order for Nifty 14,700 call, right? The reason for that being, we can see that this high here is around 650. So the assumption is that Nifty will not create a new high, and if it does, then obviously we have to exit. This 14,700 call has a high of around 210 points that was formed today, and 205, 210, and that will be the logical stop loss. And the idea is now simply to just execute this order. And, so let's just hope we can get it at. Okay, it's selling off quite a bit. So just modify it further. Let me just see this. Okay, so 169.5 is reasonably sufficient to get. 160. It's selling off quite a bit. I think it's best just to execute this order. So yeah, so I've had to sell this off at 169, and logically the stop loss of this will be above the high of this level on Nifty. So yeah, so that should be about it. Just thought that I'll share, and hopefully you have a good trading week ahead. Thanks.